the fact of the matter is a large chunk of the medicine actually goes from India, and it's all about affordable medicine. From that perspective, all administrations would like to actually keep the cost of medicines as affordable as possible for the population. From that perspective, I believe that we are on a very good wicket, and things will not change at all. Insofar as the API business is concerned, of course, there is a surge in demand from countries like India, Vietnam, and the like, principally because the fact that they see it as an alternate to China. So there is, in fact, a growing need, perhaps, to diversify from China, insofar as a lot of other countries are concerned. And clearly, we are benefiting. We expect to benefit from this, from this, change, so to speak. And in a general sense, there's a surge in manufacturing in India. There are a lot of government-led incentives, etc. And from that perspective, we still believe that it's a pretty good time to be in this, in looking at API manufacture in India.
Right. So in lieu of that, if demand for APIs and generic manufacturing is going to go up, in lieu of that, your investment in R&D, research and development, for the quarter stood at 8.2% of total sales. I don't know what's the going run rate on that, but are you going to be increasing your R&D spend or decreasing it over time? What's the trend going to look like as demand picks up? I would reckon that obviously there would be increased spending and increased investment, but wouldn't that compromise your margins, because you would take money away from your operational expenses towards R&D investments?
R&D is something that we see as an investment for the future. It's actually the bloodline for the future insofar as the pharmaceutical industry is concerned, and we aren't very any different. And as you would have witnessed, we've actually been pivoting a lot more to complex generics over the last several quarters, so to speak. So we are more into the inhalations, into the complex injectables, the biosimilars, and specialty space. And from that perspective, we do believe that this spend would continue. As a percentage of sales, it might actually come down a bit because the sales would also be surging. But I think in absolute numbers, you would see an increase over time.
What is the margin outlook then?
So it's it is really going to be on the back of, in fact, pretty good launches, etc. So the sales mix and the growth there, the buoyancy on the top line would certainly contribute. And apart from that, there is, in fact, a tight leash on cost across various other lines. So there is operating leverage when it comes to, in fact, a host of lines, SG&A, in terms of the productivity of the sales force, the productivity of the workforce at the factory level and the like. So the increase in R&D expenditure is in line with, in fact, our overall business strategy itself. So whilst we, of course, try to increase that, it's not going to be as though we are going to compromise on the EBITDA margins. As you can see, we have actually been increasing the EBITDA margins for the last 6 quarters. It's been continuous increase, and we would like to kind of maintain this trajectory in the future as well.